Welcome to our webinar. We are super excited to have you here. My name is Angelo Zitis. I'll be heading this event on this beautiful Wednesday, the 26th of May, 2021. Now, this is our second webinar on trending subjects. We aim to increase the flow of webinars in the following weeks. Keep that in mind. Follow us. So today's discussion will be focusing on industrial and precious metals, and we will be providing information on the fundamentals and the price action of the instruments involved. So we have put this webinar together for all you traders out there looking for new exciting markets to trade, markets that require a different approach, a different focus and strategy. So why are we here? We're here because we are traders and we love the challenge and the art of trading, especially when it comes to instruments that are in the spotlight, just like today's subject. As I'm going through this webinar, you as participants have the option to write a question or leave a comment in the chat for us, and I'll be checking and willing to come back and talk about whatever you guys have in mind as long as it's relevant. Now, this webinar will be focusing on industrial and precious metals, namely copper, palladium, platinum, and silver. So the largest economies of the world are now evidently in a better position with the rapid recovery in place, being able to create more jobs, uplift manufacturing and industrial activities, as well as cover for the lost ground suffered in the past year due to the pandemic. Most importantly, we are referring to the economic activity taking place in the US and China, which as a consequence have uplifted demand for materials substantially. This report will be looking into how the current improved circumstances have managed to bring industrial and precious metal prices much higher. So we make a start with copper. Copper, the powerful cyclical indicator. So let's get into some fundamentals on copper, and then we can move to the technical part. So copper's price had seen a significant run higher back in 2020, and the run has been extended further to multi-year highs in 2021. This does not come by coincidence, as the industrial metal is widely used for a number of reasons and seems to have been supported by specific fundamentals. Back in September 2020, China was the first economy to move into recovery, increasing its manufacturing and construction activities notably. I want to show you a chart at this point that we have prepared. We have received information from Refinitiv Acorn, and as you can see in the chart, in mid-2020, manufacturing activity, global manufacturing PMI started rising, and we can see London Metal Exchange copper price rising accordingly. The understanding here is that as manufacturing increases, so do copper prices. A simple, hopefully understood comment. And for this reason, according to a report by Reuters, China has been absorbing almost 50% from global copper mining through imports. At the same time, the biggest copper mining countries in the world have faced challenges keeping up with fresh supply and mining. The Latin American countries, Chile and Peru, came against a surge in COVID-19 cases, which limited mining. However, in the past days, Reuters said one of the biggest copper producers in the world, Chile's Codelco, is currently in a threatened position due to a new legislation ordered by local lawmakers, potentially impacting mining in 3 of its distinguished sites. Now, the news can impact the industrial metals price at a rather crucial point for copper, as demand seems to be increased. Some analysts suggest copper can be seen as a powerful cyclical indicator, just as mentioned in our title, and the price action in 2021 seems to be evidence backing this statement. On a final note, copper is used also in solar and wind energy generation, electric cars, and the construction of battery charging infrastructure. In the past year, there is a tremendous turn towards green energy, and this could be a positive macroeconomic point for copper prices. So let's move now to our copper 4-hour chart to go over the technical analysis. Even though copper has been moving higher in consecutive months since April 2020, in May 2021, it is currently sideways. copper has reached a new monthly high, surging to our R3 4.8875 resistance on the 10th of May, but did not move higher. Then the metal fell and tested our R2 4.7660 twice in the following week, but was not able to breach it, continuing its downward move. After falling below our current R1 4.6310 line, the market moved even lower, testing the S1 4.5030 level, but did not manage to stabilize beneath it so far. Now, if the selling is to continue, then we could be seeing the price action moving to the S2 4.4125 support, or even lower to the S3 4.2945. Now, traders should note that copper's price moves rather slow, and usually it is not prone to large movements. I'm noting usually. It's not always, it's usually. Now, the most important level, in our opinion, for this technical analysis is the S1 4.5030 support, which the market has tested but seems to be holding up as a make or break line. Now, looking at the volume below our chart, whenever the volume was higher than average, the market moved accordingly. So we would advise traders to keep an eye out for sudden changes in volume, as they could be a hint to further trends and movements. Our next choice is Palladium. Palladium breaks to new all-time high levels is the title. Now, Palladium was also able to break to new all-time high levels, and according to its price action in the past months, it makes the case for the most popular among the precious metals in 2021 so far. Demand for this precious metal was seen rising as environmental protection requirements are forcing automakers in Europe and China to turn to Palladium. And first thing that you should know is Palladium is used in catalytic converters to filter exhaust gases, and it is also used in hybrid vehicles, which is also a growing source of demand. Simultaneously, Russia's Norilsk nickel, also known as Nornickel, the world's largest refined palladium producer, has faced challenges at some of its mines after detecting subterranean water within them. It seems that the fundamentals of the palladium market have aligned altogether and supported the precious metals price tremendously, with demand rising and supply being on the back foot. Demand for palladium is expected to hold up in the next months, as automakers have been longing to increase production, making the case for more palladium possibly needed. Yet palladium could also face challenges in the next 5 to 10 years with the rise in demand for electric vehicles. Moving now to our technical analysis, you can see my levels on the right side. Palladium started May higher from where it is trading at the moment, and at some point rose very close to the $3,000 price, which is a challenging resistance for traders at the moment. Yet, as the price action moved lower since then, we do not include it in our chart as a resistance. At the moment, the metal is coming up from testing the S1 2708.50 support, which did not manage to penetrate. The ascending trend at the moment, which started on the 25th of May, is aiming for the R1 2800 resistance, which was tested in the previous days, making it a predominant target for traders. In our opinion, a move higher could send Palladium to the R2 2845 level, while even higher we have placed the R3 2900 line as our top resistance in the opposite direction. A selling trend could send the precious metal below the S1, testing the S2 2656 support last seen back in April. Even lower, the S3 2598.50 support is also imminent as the lowest level. The RSI indicator below our chart is rebounding from testing the 30 level, but in our view does not seem willing to test the 70 level, which was last seen in late April. Moving to our next precious metal, which is platinum. And the title is Can Platinum Overlap Palladium? We're going to come back to that. So platinum was impacted drastically in February 2020 when it dropped to a new yearly low. However, after the drop, the precious metal performed an impressive run to higher levels, gaining back the ground lost during the rest of the year. In 2021, the precious metal moved even higher and rose to a new yearly high level, but has stabilized in the last months. Now, The world's largest miner of the specific precious metal is South Africa, and according to data by Reuters, mining for PGMs, platinum group metals, which are a family of 6 structurally and chemically similar elements of which platinum belongs, saw a drastic increase in March compared to February on a yearly basis. Now, this is the article, the relevant article that I would like to point out. Now, this is Refinitiv Acon's article. First thing that you should note is a 21.3% increase in total mining, but looking at PGMs, platinum group metals, we see a substantial increase in output. If you see the table and note the PGMs, the increase is substantial. Now, the news may be putting brakes to the platinum bulls at the moment. So going back to our fundamentals, on the contrary, even though palladium and platinum had some correlation in the past, as we noted, they belong to the same group of PGMs group. These precious metals could be in for a showdown in the near future. By a showdown, we mean competition. Platinum is cheaper than palladium, and some analysts argue that automakers could be turning to platinum to lower costs. According to the Washington Post, European consumers are buying fewer diesel cars, which mostly depend on platinum. Now, this is a contradicting point, but I would like to note this. So moving now to our technical analysis, this is platinum's 4-hour chart. Now, similar to copper and palladium, platinum tested new monthly high levels on the 10th of May, but from there on dropped in consecutive sessions to test our R1 1206.30 resistance, which was a support initially. Then the price action rebounded higher and tested the R2 1221.15 line, and then the R3 1231.80 level. For this chart, we have also added a fourth resistance level noted at R4 1245.35 just to keep traders cautioned. At the moment, the metal is trading between the R1 and the S1, 1191.95 support. If a selling momentum appears, then below the S1, we have noted the S2 1181 line, and even lower the S3 1165.75, which is the lowest line reached so far in May, making it a rather important level. Yet, with the RSI indicator being above 50 for the time being, we could say the buying orders exceed the selling ones. And that's it also for platinum. Moving now to our last precious metal, which is silver. Basically, we had an industrial metal, copper, we had palladium, the precious metal, platinum, a precious metal, and this is our last precious metal and our last metal for this webinar. So the title is, Can Silver Break Above $28? Now, the precious metal has abruptly climbed to multi-year high levels in 2020, and even though had corrected considerably, it managed to regain the ground in 2021. Technically, silver remains nearby the 28 level, not being able to clearly breach and stabilize above it. Even when the market showed the strength to do so, the level was quickly abandoned and price action moved lower. Despite the strong correlation the gold and silver markets keep most of the time, in some cases, we see the correlation being broken. Thus, traders should keep an eye on both markets, in our opinion, as the price can provide valuable information. Traders could make assumptions when the price action between them is correlated positively or correlated negatively. They could be moving on different news. Thus, you may be seeing different opportunities arise. If you would like to see more on gold, you can visit our YouTube channel, and there you can find our weekly gold reports with fundamental technical analysis. Okay, so also precious metals adverse correlation to the US dollar is very important in our view, as the greenback trades at multi-year lows currently according to the dollar index. In the past days, Reuters noted shares of silver miners rose, tracking strength in the metal's price. So we now move to our technical analysis for silver. For our chart, at the moment, silver is moving in a sideways motion between our R1 2820 resistance and our S1 27.45 support. Both of these levels have been tested since the 19th of May, but have not been breached. Thus, we consider them a very important indicator for the further direction of the price. Now, if the market is to move downwards below the S1, then the S2 27.10 support could be next for the bears, and even lower the S3 2675 is our final support for this chart, which was last tested on the 13th of May, but was not broken, and the market rebounded higher. In the opposite, if the bulls are to take over, then the R1 could be breached, making way for the R2 2855 to come into play, which was last tested on the 18th of May, but not broken, and the market corrected lower. Higher, we have also placed the R3 2885 resistance if the bulls are ready to take over and test new monthly high levels. The RSI indicator below our chart is running just below the 70 level, possibly displaying the recent upward run. And that's it also for silver. As a conclusion, we would like to go over some important points as they could affect the pre-mentioned metals tremendously. Number one, the pre-mentioned metals could be substantially driven by what is happening in the US with the Biden administration decision to insert a 1.9 trillion fiscal stimulus package in the economy, but also announced a 2.3 trillion infrastructure spending bill. These moves tend to increase demand for all the above-mentioned metals, not only because of manufacturing and industrial and factory orders probably being on the rise, but also because we see much more confidence in consumers and investors to spend and invest and trade. Second, we will also add that as the world's vaccination process continues to move quickly, more businesses around the world will be willing to increase operations and production, which could also increase demand for metals even further. As noted, with supply of some of the metals being questionable, and on the other hand, demand rocketing, the metal market could be among the most interesting at the moment, as countries like China are having a difficult time with the price increase. Headlines, which is my third point, this is my third point, headlines in the past days confirm the Chinese are not so happy with the prices constantly rising. According to BBC, global prices for industrial metals have fallen in the past days after the Chinese authorities warned the commodity companies in the country over pushing up prices. And I would like now to move to a more trading perspective. How can you use all this information from a trading perspective? Because that's the whole point. We use our fundamentals, our technicals to make decisions on how to trade. That's the whole point. So, number one, in terms of volatility and speed, my personal view is that silver could be the most appropriate if as a trader you prefer fast moving markets. Okay, so that's it for the most fast and volatile market. I believe it's silver. Then the most liquid is platinum. After that comes palladium, and we leave last copper. This is in terms of volatility and speed. Okay, so you have options on a big range of traders. Traders that like to trade fast, or traders that like to trade momentums, or traders that like to trade slow. Okay, these metals provide different opportunities and different options. Another thing that I would like to clear at this point is regarding our previous technical analysis. So I would like to clear that the technical levels we have provided should be used with caution, as these levels could be subject to change. Traders should make their own levels and test them. You can take our levels, you can take other analyst levels, put them together and see which ones work for you. It doesn't mean because somebody said that these are the levels, that these levels will be there and they will remain the levels. Okay, good traders make their own levels. Don't just use the ones we provide blindly. Question the validity of the levels. That's important. And in general, you should, when it comes to trading, you should question everything you see or hear. Make your own decisions. Now, another thing that it comes from the levels is the direction of the movements of the price action. So the price action of the instruments pre-mentioned is subject to the traders. This is determined by the traders' view, how you see it. Okay, someone could be short for 15 minutes in an upward trend line lasting 4 hours and still make money. It depends on who you are as a trader, and the view you have depends on what time frame you like to trade. Do not follow anyone saying the trend is up or the trend is down. If you see an opening, you should go for it. Trust yourself. Okay, I'm going to take a moment to check my chat or my questions. And since we don't have any questions or comments, I am heading towards the closing. As a closing, I would like to say thank you. Special thank you to the webinar group and marketing for putting this together. Thank you to the research group, and many thank you to our participants today. We appreciate your time, and we aim to provide more valuable trading information in the near future. If you would like to contact us for any reason, question, trading idea, concepts, a subject that you would like to see as a webinar, please do so with an email to research_team@ironfx.com. That's research_team@ironfx.com. From everyone here at IronFX, wishes for health and happiness. And until the very next time, solid trading.